Welcome one, welcome all. Thank you for joining me yet again for another video. Before we get started, you already know what I want you to do. Please, please, please hit the subscribe button and the bell so you'll be notified for every video that your girl Allie posts up for you. Okay, so today we're going to be discussing closing costs. What are closing costs? Closing costs are additional fees on top of the price of the home that you have to pay in order for the loan to close. Lenders have to make money too, so there's going to be some additional fees that you have to pay to go along with the purchase of the home. Now, the closing costs are going to vary state by state, but in general, I tell people that it's going to be 2 to 5% of the contract price. It's going to vary, so anywhere between 2 to 5%. So have that money in your account on top of your down payment, on top of the actual loan price itself for your closing costs. One of the fees that you will see is an origination fee. That is the fee that the lender charges you just to open and start the loan, starting the loan process. That's going to be 1% of the loan, okay? Now, you're going to get an estimate of what all the fees are going to be, but note it is just an estimate, okay? By law, this estimate cannot be too far off from the real numbers. At least 3 days before closing, you're going to get a closing disclosure that's going to give you the final numbers that you have to bring to closing. And again, that number is not going to be too far off from the estimate that you received earlier. It's not going to be thousands of dollars off. It may be a little off, but it's not going to be so far stretched that you cannot complete the process. You're also going to see a flood certification. The lender has to run this to make sure that the home is or is not in a flood zone and to see if the home's at risk for any potential flood damages. Now, you want to get this flood certification instead of getting flood insurance because that is a beast. You'd rather have the certification than the flood insurance. Documentation review, underwriting, and processing. Everything the lender do is going to cost you something because they are doing work. So it's going to cost you something. These things are done to make sure that your documentation is in line, your financial statements are in line, your credit hasn't tanked, you still are employed. All these things must be verified, and you will pay for them to be verified. Note. Why do I always say note like I'm a teacher or I'm a textbook? Note. I'm going to say it again anyway. Note. It is a good idea to get with different lenders to see what their fees are because some lenders may be higher and some may be lower for their doc review, their processing, and their underwriting. So you just may want to make sure before you go with a particular lender so that you know what you're paying for. If you're getting an FHA loan, you are required to get a mortgage premium, and that is 1.75%. That can be a lot if you already don't have enough money anyway. So it could be possible for that to be rolled into your loan. So get with your lender to see if that can be done for you. Title. Now, you want to get title insurance because while it rarely happens, weird things do happen. For example, let's say that Grandma Jean passed away and Grandma Jean left her home to all 10 of her kids. 10 kids is a lot. Neither here nor there. All 10 of the kids. Nine of the kids talk regularly. There's that one kid that nobody knows where they are, nobody knows what they're doing, and that kid does not even know that Grandma Jean died. Did I name the person Jean? I hope so. Grandma Jean died. The kids sold the house, they got paid, all is done, all is good. That one child came back and said, Grandma Jean died? When did she die? What was wrong with her? I didn't know. Y'all sold the house and you got money for it, but where's my cut? That's where title insurance comes in at. That will take care of all of that. So you need a title policy for you, and the lender has to have a title policy too, because if you were to default on your loan, they want to make sure that they are covered as well. Prepaids. Prepaids are what you pay up front or what the lender is going to hold for you so that they can pay when the bill comes due, like property taxes or homeowners insurance. If the lender already has that money set aside for you, they'll just go ahead and pay it when the bill comes due. That's part of your prepaid. Here's another note. The seller is allowed to contribute to your closing costs, but they are not allowed to contribute to your down payment. That's all you, baby. That is all you. The last thing I'm going to say before I let you go is that the more expensive the house, the more expensive the closing costs could be because some fees are determined by a percentage of the price of the home. Okay? I hope that you enjoyed the information. I try to keep this video short because everybody has things to do. If you have any questions pertaining to this or anything else, comment down below, or you can email me, or you can DM me on social media. Okay? Thank you guys for watching. I really, really appreciate you. Don't forget to subscribe. Have a great day. Bye.